get this recorded here. So we're looking at the regression line fractal framework, the RLFF, and we happen to pick Intel. And Intel came out on our screen as an extreme, one of the 5 extreme pullaways from the 270. So we have price here at about almost 30, and then the RL270 down here at 2640. And this turns out to be just about 6 ATRs of an excursion away from the 270. So that's the size of the opportunity. It's also the size of the outperformance. So one of the things that you can do is if the market is up and tech is up faster or bigger than the market on Monday, and Intel even better than the tech, then this is a no-brainer to buy because it has market strength, sector strength, and company strength all pointing up. At the same time, if this starts to collapse, we can use the 270 as a reasonable price target on the downside. And you can see in every case before where it got to an extreme reading above the 270, that was followed by a reversion back to the 270. So for as long as this thing is going well, you like it being long. But if it starts to collapse or the market and tech start to collapse, then this move back to the 270 becomes a reasonable price target for the long-term holders. That's where they're going to start buying it back at fair value. So the regression line fractal framework has 4 regression lines. There is a fast pair and a slow pair. The fast pair is the 10-period regression line and the 30-period regression line. So the fast, there's actually a fast member of each pair and a slow member. So in the fast pair, the 10 is fast and the 30 is slow. And the fast one is 3 times as quick as the slow one. And now in the 90-270 pair, we have the 90 is fast and the 270 is slow. Oh. For some reason, I just lost it. It just erased all the drawings. So we'll try it again. So let's try that again. So in the fast pair, we have the 10 is fast and the 30 is slow. And then in the slow pair, the 90 is fast and the 270 is slow. In each case, there's a 3-to-1 ratio between the fast and the slow. 10 times 3 gives you 30. 90 times 3 gives you 270. So what we're really looking for is a price divergence from the fast regression line, the 10, and comparing that to the 270. So right now, the 10 period is up here around 2880, and the 270 is at 2640. This is actually where that 6 ATR difference is. Even though price has gone way up here, we just measure off the 10-period regression line as the proxy for price. So if it fails here, coming back to the 270 would be a natural price target, and that would give you something like a 6-to-1 reversion to the mean. So Intel looks favorable. The other ones that were in that stack included Coca-Cola. Actually, the biggest one was Travelers, and this is why you might be interested in the relative strength leaders in this fractal format. Take a look at this price action in Travelers. Nothing wrong with that. That is as nice and orderly a move as you can find. Now, what's really interesting is that there was a time when you can see down here where the 10 period was at an extreme distance below the 270 and would have triggered, and you get some nice moves, and look how that move comes back to the 270 as a target. Now, what's interesting is here, when the 270 crosses its own 10-period 30-period Bollinger Band, which is this gray area, you get the idea that there's a change in the price regime. What I like now about this move in Travelers is that it's above its recent swing high and just steaming north. So you have something like a 10 to 1, or I'm sorry, this I think was about an 8 to 1, 8 ATRs above its own 270 RL and still steaming north. So by the virtue of the fact that it's that extreme, you know that inside the Dow, this is the best divergence away from that 270 of any member of the Dow. So that becomes a natural auto buy if it's moving up faster than the market. So if the market's up and Travelers is better, that's an auto buy because you know people are buying the market and people are also buying Travelers. So let's look at Cisco, Chevron, and Coke to round out our look at the top 5. So Chevron is CVX. Again, you have a very favorable distance away from, you have the RL10 way up here, and it's well above the RL270, and this gives you something like a 5 or 7 ATR favorable move away from the 270. Now, you could look at this and say, you know what, I think price is looking very toppy right here, and energy is an extremely strong sector right now. It's the strongest one in the world, the strongest of the Dow sector spiders. Maybe this run is done. If so, you now have a reasonable price target to look at for a reversion to the mean. And if you were getting short this thing, you could set a target at about 122 as about 2/3 of the way down to the 270, and you could play that trade. So that's Chevron. Let's look at Coca-Cola. This is very nice. So Coca-Cola has given us about 20 days of sideways quiet channel and is just starting to collapse. So the opportunity back to the 270 is a move from 40.75 down to 39.50. And if we go back to our chart, inside Coca-Cola, that's actually 4 ATR move. So if you can manage 1 ATR in Coca-Cola, which is about 35 cents, you have a 4-to-1 trade on a reversion back to the 270. So this is a 4-to-1 trade frame inside here. So 4-to-1, using 1 ATR as your risk. So if we see price weakness on Monday, and if Coke is failing worse than the S&P, you could say, you know what, this move here was false, and this is really more the realistic price down here around 39.50, and now you have a 4-to-1 reward to risk opportunity. Okay, now the last one in this stack is Cisco. Cisco is in kind of the same boat. It's had a nice run up, but it's been stalling here lately along the rest of the market was stalling too. Let's tighten this up so you can see this a little better. So now that we now know that this distance from the RL10 to the RL270, as measured by ATR, is something like 6-to-1, and that's one of the best moves away from the RL270 of any of the Dow members. If this sideways channel here that is collapsing, let's say just let it get below, if it violates below the green line, which is the RL90, below 2450, you could set 22.25 as a reasonable price target. Now, when I look over here and I see this congestion zone, hey, a simple closing of that gap to 23 would be a reasonable short. On the other hand, this gap up and move up has been one of the strongest excursions of any of the Dow members. So if it holds here and starts and breaks out to a new high above 25, I have no compunction going long, because now what it looks like is that the gap was true and correct, and this thing is destined for upward movement. So we are right now at a critical state. It's right near the edge of failure, where you have a nice 5-to-1 reward to risk to get back to the 270, or if it breaks out above 25, you now have an auto long. Okay, so those are the 5 in the Dow that are above their 270 by an exceptional amount. So now let's shift over to the 5 that were on the downside. We'll start with Pfizer. Pfizer was in the number 1 position. And you can see it's a little easier to see on this one. We have Pfizer in a rising sideways quiet channel. The last 5 days have been higher lows. The 30-10 crossover has occurred. And now what I want you to notice, let me get rid of some of these drawings and zoom in even closer. Some things that you can really like. Inside this circle, some important things have happened. We have a 1030 RLCO to the upside. And you can see that we have a both members of the fast pair just crossed the 90. So we have some upward strength happening here. You can see that the 30 has rolled up. And so if this gets above 29.90, then a move to 31.50 is certainly well within order. And so now you can see that we have a nice, we could even play this trade here from 29.70. You could wait for it to get above 30 on a swing trade basis. And then this is the size of the opportunity. Now, why could that happen? Well, this might simply be nothing more than a rejection of whatever caused this last sell-off. You know, there was a 5-day period in which it went from 32.50 down to 29. You know, that's a 10% sell-off. But then we have almost 20 days of failure to fail further, and a low, a higher low, a higher low. The 1030 crossover has occurred. The fast pair has crossed the 90, and now we have a favorable trade back to the 270. So that's the technical case for Pfizer. Next one we'll look at is Visa. I like Visa even more because you can see that it's been, after this sell-off period, we've had a nice regime of upward movement, and yet we still have a very favorable distance between the 270 and the 10, and this last pullback of the last 3 days has brought it right back to the most recent support level. So we have Visa in a perfect critical state. We have a favorable long side trade, and then if it collapses here, the next target would be down here around 205 with the 90-period regression line, and then at 199, and then over here at 195, based on previous support levels. So we have Visa in a critical state. That looks pretty attractive. Nike. Even better. This is one that can collapse in both directions, right? So we've already had one effort to make it collapse. It wouldn't take much to believe that this is going to fail and come down and test 70. But at the same time, there's a nice distance from the 10 to the 270 to the upside. So we have a nice critical state here, and we can trade a favorable reward to risk ratio. We can create a nice frame that is a favorable reward to risk ratio in either direction in Nike. And you can let price pull you into this on the correct side. You don't have to have an opinion. Let's see, BA, I think that's yeah, Boeing. Also almost a 5-day down here. Not quite. We've had a collapse from 138 down to 132. That has created a nice reward to risk ratio back to the 270. At the same time, a collapse here says look out below to 129, 126, 121. So Boeing in a critical state. And that's what I like about what this framework is finding are things that can trade in either direction. So if we think about the S&P, it has pulled back from beyond the floodplain back to the edge of the river. There's a 3 to 5% move back to the Bollinger Band mean in the middle of the river. If that were to happen, you would expect weak things like Boeing to collapse to here or even to here. So if the market shows weakness and this is weaker, we have a nice high payoff short. But if the market holds and Boeing starts moving up with strength, you can see how it can get to 270, back to the 270 RL, and has a nice tight little doji in here. And now you have a favorable reward to risk ratio trade in Boeing. So look at the size of these swings on it. It gets 4 or 5 days in a row up. Here's 10 days in a row up, 5 days in a row down. So once Boeing starts moving, it has these 4 and 5 day swings that you can now participate in a risk-adjusted way just while the market is open. So let's head back to that regression line framework then. All right, so what we just looked at was just this section of this little report. It looked at about 10 signals. These ones in the top row, these positive reward to risk ratios, are reversion to the mean to the upside. So Pfizer was a 7 ATRs below its 270 regression line. Boeing was 4 1/4. And all these here that are on the bottom row are ones that were advanced far beyond their 270 to the upside. So Travelers was 8.11 ATR above its 270. Cisco was 7 3/4. Chevron 7 1/3. Intel 5. Coca-Cola 4. And so depending on your preferred targets, here's some ETFs, some S&P 100s, and NASDAQ 100s. So again, we're just looking at the difference between the RL10 and the RL270. We're defining the opportunity, or this reward to risk ratio is based on the reversion back to the long-term price, the RL270, and we're basing it on 1 times ATR of risk so that we can normalize the trade frame. So I look at this as another way to think about auto framing. It doesn't have the mechanical entries, but you can compute those pretty easily. And I just think it gives us another nice way to look at both elements of the trade from the extremes. And if I were to draw this as a bell curve, for example, this is what I'm trying to say. If we have some kind of normal distribution and we block off those things that are in the middle, And we just say that the RL270 is the median, or that's the fair value for the time frames two time periods higher than ours. We care about these that are extremely good because they can keep going, or when they fail, it's a long move back to the mean. And these ones that are weak, that can be a really strong move if the weakness continues, or if it reverses and now is coming back towards the mean. We're interested in these things that live out here on the extremes because we get bigger percentage moves in shorter periods of time in either direction. And this supports the idea that from extreme conditions come extreme results. So that's what I want to say about the regression line fractal format and the idea of using those 4 regression lines. You can see more videos on that in the YouTube channel, and then follow our discussions in the chat room. But that's everything I want to say about that tonight. So that's everything I propose to cover. You should see half a dozen trade framing ideas in there for swing trades, and we at least have this nice little stack in here. Let's just, for the heck of it, let's take a look at Cliff at 3.4 to 1, one of our auto framer favorites. Let's just knock that one out while we're here. And let's look at Brazil too. I just saw that one. I love Brazil in this location. The S&P pulled back. Brazil hardly budged. It's already resting on the previous swing high. It's well above its 270. It rejected this failure point and made this nice move back up here. And now it's the strongest of the regions. And if it takes off from here, where could we see it going? Very nicely. $51 is definitely within target. And then if it gets above 51, excuse me, then it's at like an all-time high, and off it goes. That would be excellent. Not all-time high, but a 2-year high, and that would be really powerful. What I want you to notice in here was this was the previous favorable excursion, and we framed this one back when it was here as a 4 to 1 move back to the 270. It failed, and now it gave us a 4 to 1 back to the previous swing high. So when Brazil, this was at the live trading workshop, when Brazil was in this location, we loved this. This was a perfect way to trade reversion to the mean or a resumption of the trend. What we got was a resumption of the trend, and so now we're looking at a return to 51.50 from here. And if it gets above 51.50, off we go. All right, so let's take a look at Cliff, which was something like 3.5 to 1 on the auto framer. And you can see why the 10-day high is back up in here. So if we get a positive entry here with a tight little risk, this gives us like 3.5 to 1. And the Huskies remind us that if it fails below here, look out below. And now this is an auto short. So Cliff is in an ideal position for us in a critical state. I agree, Tala. That's a really good looking chart. So now if we look at this as a regression line fractal format, you can see the difference between the 10 and the 270 is really favorable. And then failure below 1375 is auto short. So I love Cliff in this location right here. Okay, the dogs are talking. They say it's time to stop. And the basketball game's on here. So You guys have a good rest of your Father's Day, and we'll see you in the chat room tomorrow.